This is not a product designed just for Muslims, because the principles of Sharia finance make good commercial sense. The fact that it understands risk, the fact that it underlines having assets as a criteria, and the governance surrounding Sharia finance is very sophisticated. If we look at some of the problems that the financial services sector have had, one of the issues that we've had is our governance has been very weak, whether it's been from a regulatory perspective or whether it's been the way we rate products. And the whole issue of rating has become a big question mark, that are the banks aligned with the rating agencies, because there's been an advantage for them to have certain products rated better than others. Under Sharia compliant, that principle would not apply, and therefore I think if investors are looking for sound and solid structures that give them clear transparency and show them a very clear underlying asset so they can see where their money is being invested and where that return is coming from, it would make commercial sense. So certainly to me, I don't think this is a religious product, but it is a solid financial product. If we go back to the fundamental principles, what caused a lot of the financial crisis is when banks were over-leveraged, in some cases 5 or 10 times. Now the principles of Sharia finance means that the underlying asset has to be commercially viable, because Sharia finance does not pay interest but it shares in the profit, which means that if your underlying asset is not commercially viable, it is not Sharia compliant. So if you look at the principle of subprime mortgages, which was the catalyst that created the crisis, it would not have been Sharia compliant, and therefore by default we could have avoided quite a lot of the issues that were created. I don't think you can say that it absolutely would have avoided the crash, but do I think it would have made a significant difference? The answer is absolutely yes. It relies on profitability, which means that the underlying asset in all cases needs to make sense, and what is the definition of making sense is it has to make a profit, because you actually you fund it through the profitability of the underlying asset. I think Sharia finance understands the principle of risk, because if by definition you're basing the investment on profitability, you recognize that where you make a profit, you can make a loss too. And therefore I think Sharia finance is one of the specific areas of finance that recognizes risk probably better than most. I think the way that the Islamic finance is perceived by international investors is, in some respects, I think it's not very well understood. I think a lot of people haven't quite grasped how simple and basic the principle is, because the basic fundamentals of Islamic finance is where you have an underlying asset that supports the investment. And I think that it's one of those areas that I don't think the market has really understood as well it should do, because I do think in the long term this is one of the biggest growth opportunities in the financial markets. I've recently launched a company called 90 North, and 90 North's principal objective is to acquire UK real estate. So we buy iconic properties around the United Kingdom, package them in a Sharia compliant way, and then provide that as an asset to Sharia compliant investors in the Middle East. So if you have somebody in the Gulf who wants to invest his capital in the UK, I would essentially acquire a piece of real estate, normally a commercial building, which I would then structure in a Sharia compliant way and offer that as an investment to the investor. Commercial real estate, one could argue, is a speculative product, but when you're buying assets which are underlying rented, so for example, if I buy a building that's occupied by BP and BP has a 15-year lease against that building, then really what I'm providing the investor is 15 years of predictable earnings and a yield on the investment they make. So actually the type of investments that I focus on always have an underlying yield component which provides the investor with almost, depending on the covenant, but a guaranteed cash flow through the asset that they acquire. Islamic finance probably has around $1 trillion of liquidity within the wrapper of Islamic finance. I see in the next 5 years that market potentially could go 200–300%. I can envisage 5 years from now that we could potentially be looking at over 5 trillion available in Islamic finance, because if you look at the world's population, 25% of the world's population are Muslims. If you look at currently today, there's $1 trillion of liquidity sitting in the Middle East. If you look at Malaysia, Indonesia, if you look at the rest of the market, the opportunity for growth, and I would strongly urge international investors to look at this potential space, because I do believe it is one of the biggest growth opportunities that exists within financial services today.